Well, for more on the Hang Seng's remarkable run, we're joined by William Ma live from Shanghai. He's Chief Investment Officer at Noah Holdings in Hong Kong. So, William, let's get right to it. Why has the stock market seen these strong rallies recently?
I think technically you are seeing a global, synchronized recovery. So it's not only good for the Asian market, it's good for the global market as well. To be specific, we are actually seeing allocators moving money away from the US market to Asia market. One is because the Asian market is trading at 30% cheaper in terms of valuation, but in terms of earnings and growth is almost double than the US company and economy. And secondly, to be specific on the Hong Kong market, actually last year, global allocators were too bearish or worried about the global economy's slowdown, if you like. But now after the 19th Congress Party, people are being more positive and actually seeing a U-shaped recovery instead of an L-shaped recovery. So this year, I think people are getting more bullish on the Hong Kong market.
So which type of companies really helped fuel the rally?
Just like in the US market, in the Hong Kong market, actually same as the China-Asia market, is the new economy, the new sector, new technology. And they are concentrated in certain names like Tencent or the high-tech company and top-tier large cap. The trend is those companies continue to go strength from strength. And this year, we are expecting the trend to continue as well.
So what's your take on the overhaul that we saw with the IPO rules?
I think for the IPO rule, it's very constructive and positive. If you look at Hong Kong Stock Exchange, actually, they have been innovative in terms of changing new things to the industry and to the market. Back in the 2000s, if you recall, actually, there are some US NASDAQ companies like Microsoft was still listed in the Hong Kong market. So I think the Hong Kong Stock Exchange, the recent move is actually trying to improve the efficiency and trying to improve the sentiment in the overall Hong Kong market. And I think the market take it positively, and it's also being reflected in the Hong Kong Stock Exchange share price as well.
So with the changes to the IPO rules, how are they playing out so far? And what about in the long term? What are your expectations there?
If you look at the IPO rules, I think the most eye-catching is still share classes. But more than that, actually, we are talking about potentially reducing stamping duty and cross-asset kind of collateral. I think those all initiative is very important and actually is equal ground. If you look at some of the rules, they are already in the United States, NASDAQ and NYSE, all those rules are already there. If you look at the recent move of the Singapore Stock Exchange, I think they are doing similar things. So actually, I think those are becoming level equal ground. Positive for the company to be listed in the Hong Kong Stock Exchange, in particular for those Chinese companies that they have, one more options besides NASDAQ.
And speaking of options, if we look regionally at the competition for Hong Kong, what can it do to become a more attractive option versus, say, Shanghai and other exchanges there?
I think for the company to be selecting which exchange to be listed, besides, dual classes, besides, the stamp duty, besides the volume, I think regulations is one thing that all listed companies are looking for, better corporate governance. And in this regard, I think the Hong Kong Stock Exchange and SFC is doing a very decent job globally. So I think those will encourage more money or more company to be listed in the Hong Kong Stock Exchange. And also, being close to the China market, I think it also benefit, if you look at the stock connect between Hong Kong and Shanghai, Hong Kong and Shenzhen, we are seeing more and more flow from the Chinese community investing in Chinese company in the Hong Kong Stock Exchange. And we're actually expecting some global companies to be listed in the Hong Kong Stock Exchange. And Chinese investor will hop through the Hong Kong Shanghai Connect to invest in those companies as well. So it's an access to global market, not just a Chinese company eventually.
All right, well, thank you so much for your insights. William Ma, their Chief Investment Officer at Noah Holdings.